Last time we talked about returns and grading, looking at the type of returns and having that data. So what happens when you have a lot of, let's say, grade B product that comes back? So grade A is product when, maybe just a little bit of wash or whatnot, you can sell it back as new easily, or maybe not new, but in okay condition. But grade C is one that you could resell, but probably used, or you're in a different channel that's not your main platform. Um, and of course, C is just not sellable. You need to figure out how to deal with those. Today we're mainly talking about grade B. So let's say you have a lot coming back in and you're not able to sell those, then what do you do? Because a lot of founders may not think about this, but having a lot of grade B inventory stuck with you, first of all, is a cash flow problem. Because by not selling it, you're not getting the cash back. And two, it becomes more of a cost problem because when you don't sell them, they're in storage and they're costing you perhaps storage fees or other type of fees that you might not really think about, and it adds up. When there's only a couple of pairs of shoes, you maybe think it's okay, but when it comes to hundreds or thousands, when you're scaling up, because it could happen, then it becomes more of a cash flow and cost problem. And today we're going to talk about it and have three things, three items that you can think of and see if it works for you. So the first is understanding the true cost of carrying the inventory. As I said, by having the product there and not selling it, you have cash flow or money that is locked up there. Whether it's $30, $20, or $10 per shoe, it's locked up there because you're not selling it. And second, the cost of storage. So that cash is also the amount that you're kind of burning every day, every month. You're not selling the shoe, but you're leaving it in a third party storage or whatnot. And the second thing is how to sell grade B. So there are different types of ways that perhaps, even if you can't sell it on your main platform or your main channel, it might affect your brand or whatnot. Then what are some of the ways to deal with that? And then the third is just the tax write-off protocol. So depending on your country, you might want to look into that. Is there some kind of tax write-off that occurs because you have all this stock that is perhaps unsellable and you need to figure out how to dispose of it in a way that complies with the tax and that you can use it as a write-off. But again, that depends on the country. We'll talk a little bit more about that later. But those are the three things we'll talk about today. Hi, I'm Ivan, and we've moved over 10 million pairs of shoes. And we work with a lot of the largest retailers in the world. And this channel is to share some of our experiences on sourcing and supply chain over the years, and just sharing. If you like this kind of content, you're a first time founder, or you're thinking of founding your own brand, then please like and subscribe and share and comment below if you have any questions you want to ask or if you have any topics that you'd like us to talk about. Thank you. So the first thing, as we said, is the true cost of the inventory. You need to think about is that going back to pair of shoes, it's not just the production costs and the FOB or the logistics costs for to get to your warehouse in your destination country, but that you have, let's say, a $20 pair of shoes sitting in your warehouse, and let's say it doesn't get sold for 1 year, then effectively you have that $20 or more locked up in cash that you're not getting back for the year, plus any storage expenses and whatnot. And again, in a small amount, maybe you don't notice it, but when you start scaling and it gets to, dozens or hundreds or thousands of these, then all of that starts to get locked up. And it's very significant because, when you start to do retail, when you start to do e-commerce or whatnot, or even wholesale, one thing that you'll notice is that cash flow is very, very important. Well, one thing we think about is perhaps if it's your first time, you only think about profit, revenue. Well, all that is definitely very, very important. But for a retail business, cash flow is, I guess for all businesses, but for retail, cash flow is king. Really, like you need to figure out how much cash is coming back so you can pay your factories, pay your other vendors or whatnot, and have the money still coming in for your operation expenses. Because a lot of the time, you won't be finishing all the sales before you order your next batch. as we previously in another video we said, there's a restock point where you need to figure out, which most likely is not when you finish selling everything, because then when you restock, it could take 2-3 months to restock, like place a new order with the factory for them to make it and then ship it to the port and then get to you or whatnot. So most of the time it's before you've sold everything. So which means that you need to figure out that cash flow is, do you have enough? And when you have a lot of these grade B products locked up in inventory and you're not really selling it, you can't, because for example, it doesn't, a platform like Amazon may not be suitable for it. It might damage your brand because it's grade B or whatnot. Then that's a real issue that you need to first calculate and then figure out what to do. So second is we're getting to the what to do part. So let's say you've calculated, you have the inventory, let's just say you have 100 pairs of these grade B shoes in your inventory. And as we said before, it's not, it won't be able to be sell as new because of certain, wear and tear for the customers, perhaps, or any other issues. Then one thing you can look into that sometimes we use is liquidation platforms. So, for example, Amazon has its own liquidation or these kind of sales platform for grade B types of products. Should look into that, figure out how much money do you get back from them. Is it worthwhile? Again, it will probably be a lot cheaper than what you will sell retail. So you need to figure out, is it okay with you, or you still want to figure out a better route? Of course, another route is if you do e-commerce and you're managing your own platform, maybe you have some kind of a used section where you can sell these for maybe higher than if you liquidated them, but of course lower than if we're new. And this also depends on if your product type allows for that kind of thing. So of course, there's a lot of things that you cannot really sell used, but for products sometimes like footwear examples, it's sometimes okay. People accept used shoes, but it needs to be washed or cleaned, or that you have to guarantee that it's cleaned or whatnot. Again, like it really depends on the market and the audience. Are they receptive of that? Sometimes some people don't like that either way, if it's anything to do with clothing or shoes and whatnot. So it really depends on your audience. But again, you should look into these, either it's liquidation platforms, your own platforms, or even wholesalers. Sometimes there's wholesalers in your country that might just be looking for a lot of your product. Like you can maybe be able to sell 100 of your shoes grade B to them because for their audience they have a different market than you, and they're okay with that. And it happens. So for take an example, sometimes the manufacturing partners that we have, they have excess product that they have produced for maybe their own in-house brands. And of course, we can't sell excess product of other brands because it's the other brands inventory, and normally you don't really have excess of that. But let's say they produce for their own brands, domestic brands that they own, and they're okay with selling the excess to some wholesalers that maybe actually buy this in the dozens or hundreds, and go sell it elsewhere in let's say Africa or other countries that are more receptive or have that market there, which is totally fine. Again, it just depends on the market. You just need to look for these liquidation or other platforms and see if you can sell your grade B and kind of get that cash flow back. And the third thing is perhaps a lot of people don't think about is a lot of your grade C products. When we talk about grade C products, and maybe after you've spoken to the factory and negotiated and got some kind of agreement with them, whether they'll produce this another batch for you at the same amount of these grade C defect shoes and ship it to you, who pays for what, all that is gone. But you still have these grade C shoes with you. So what do? You can't sell them because, again, the product quality is not there. So one thing you can consider, and again, this is based on your country that you're selling in. I don't know if this is the case for all countries. I can just say that you should go ask a tax expert, accountant, or someone that has the legal and local accounting knowledge, and of course holds a license in that can legally advise you and give you the correct information. But I'm just saying you should look into it because it's possible that if you follow a certain protocol to destroy these shoes, or to get rid of them, whatever that means in the local law and tax sense, you might be able to get a tax write-off. on your annual, company tax filing. So that's something you should look into. It's not that it won't be useful, and you shouldn't just throw it in a dumpster without any documentation, because it's possible that even though you may throw it away anyway, but if you throw it away in a correct way, you might be able to get a tax write-off depending on the market that you're selling in and the market that you're kind of disposing of this grade C inventory in. So you should look into that. Today we mainly talked about three things when you have a lot of returns coming in. Is after you've graded them, you want to look at first the true cost of the inventory. Actually, you should have done that before you understood the true cost. And now you're figuring out, okay, what is the cash flow and cost significance of all this, grade B, grade C inventory that I still have, and figure out, okay, is it worth it? Should I look for liquidation? Figure out a separate kind of channel to sell these grade B shoes that you can't sell on your main channel, so that you get the cash flow back. It's not just sitting there as unsold products are just, sitting cash there. And then lastly, if you have a lot of shoes that you can't sell, they're grade C. So from a quality perspective, it's unsellable. Is it possible to figure out, with a professional, with a local tax or legal professional in your country, figure out if you're able to get a tax write-off when you dispose of these grade C shoes. So hopefully that was helpful to you. And again, please like, comment, and share if you like and find this content helpful. And comment below if you have any questions or you have any other topics that you want us to talk about. And I'll see you in the next one.